What's going on, everyone? It is an exciting time to be a trader. We are only 0.2% away from a brand new all-time high, so hopefully you had a good day in the market today, but even if you didn't, that is okay. Tomorrow is set to be a big day, given some important PCE inflation data that we'll release, and of course, the potential for a new breakout on the S&P 500. We have some nice, useful information in today's video, and we're not going to waste any time either, so let's jump right into it. Starting off with what happened in the market today, 75% of the S&P 500 closed up in the green, so there was some good market breadth, and that's never a bad thing. Looking closer at SPY, today it closed right around $611.87. As we look closer on an intraday chart, we can see this all-time high is so close at the $613.23 area. This all-time high was made on February 19th of 2025, of course, and we are kissing this all-time high. While this recent price action is great, what I really like more than anything else right now is the type of movement we are seeing in pre-market and after hours, because this shows you what the smart money is doing. As I'm sure a lot of you know, but some of you might not know, most of the S&P 500's returns actually come when the market isn't even open. As we can see from this data here, basically, most of the returns happen in pre-market and after hours. Now, there are multiple reasons to explain this, like the lower liquidity, some big news events that could happen in after hours, but in the most direct sense, most of the smart money is trading during this time. That's really only who is trading during this time. And basically, when we see moves like we are right now in the S&P 500, where we are seeing the market rise during this time, what this shows you is that in that crowd of so-called smart money, like hedge funds and other institutions, there are so much more buyers than sellers. And just like we saw during the April massive sell-off, when we were seeing mega gap downs, then the market ended up just tanking afterwards, we're kind of seeing like the opposite effect right now, where we're just seeing a lot of smart money rush in. And we can literally prove this, because when we go to this data here, we can see that Bank of America institutional clients are buying into tech stocks at their most rapid pace since 2008. So there are no complaints here. So literally what we're seeing is smart money and hedge funds and just broader institutions rush into the market right now, partially because they're scared of missing out. What's very interesting is that when we look at the market over these next few days, especially for tomorrow, there aren't any major earnings scheduled, but there is something much better. Tomorrow, 1 hour before open, we will have important PCE inflation data set to release. This is important because this is the Fed's preferred inflation gauge, and according to analysts, core PCE prices are expected to rise by 0.1% month over month, which is the same pace as April, and this would result in a 2.6% annual increase compared to 2.5% in April. And considering the Fed's inflation target of 2%, that basically means inflation is still a little bit too aggressive than what the Fed would like. And of course, everyone is looking at the Fed right now to see what they're going to do with interest rates, because everyone wants those rates to be cut, so then we could see potentially even further market gains and potentially even more strength in the economy. Now, here's the thing. If we do see the PCE data come in higher than what is expected to come in at, which is 0.1%, that can be a bad sign. So if we see it come in at 0.2%, 0.3%, or anything else that is showing that inflation is hotter and more aggressive than expected, that can be something that certainly throws the market off. It's not expected to come in at 0.2% or higher, but if it does come in, that is a risk, and I wanted to say that now so you could have the information ahead of time. Again, this is going to release 1 hour before open. Now, I will say in a broader sense, we are in a period of very positive forward returns. Basically, we can see from this data here when the NASDAQ recovers from a 20% dip to a new one-year high, which is something that we saw earlier this week, the returns are generally very positive. Like these returns aren't even good, they're great. And when you could see like the further out you go, of course, the stronger the returns get, but also the higher the likelihood we see of positive returns. The most dangerous point during situations like we are in right now with the market is in this like 1 to 2 weeks later mark. But to be honest, like even in those situations, the market has popped up 67% of the time and the returns have been very strong. So that is great to see. And then also when we look even further on like a month by month basis, we can see that July is actually the best month of the year in a post-election year, which is what we're in now, and it's the best year over the past 20 years, or best month over the past 20 years. So we are in a very historically strong time right now. And another thing that certainly stood out to me is that when we look at the data over the past 10 years, which is the green bar on this chart, we can see while July isn't the strongest, November is, but we can see that over the past 10 years, July has been like exceptionally strong. So all of that is to say is that the market normally does good around this time of the year, and it normally does good in situations like we're in now. So actually looking at the market right now, again, that 613.23 area, $613.23 is the level to watch on the S&P 500. We are so close to it right now, and considering we had that inflation data set to release 1 hour before market open tomorrow, there's a good chance that we could potentially get very close to it and potentially even break it as long as the data comes in good. As we can see from the levels that we have plotted and have you could say had plotted on the chart over the past few days. 612 is another key area. We can see this is posing as a little bit of a resistance level. We briefly got through it today, but rejected back down. So just keep like a brief eye on like 612 for tomorrow. Another level of support now is 611, and then 610.50 is another level to pay attention to. And if you're someone who's been riding this uptrend, first of all, congratulations, because you've probably made some good money recently, but also, too, make sure to trade smart. If the market starts trending against you in a way that you're not comfortable with, then get out. It's always okay to re-enter, but it's not okay to just bag hold onto losing trades because you're trying to avoid cutting a loss, even though you know it's time to. So just keep that in mind. Tomorrow should be very exciting, though. And besides that, let's get right into some specific setups and predictions. A stock that is definitely on watch is Enphase, and it is to the upside. This was a big money trade from yesterday, and it crushed it today. So basically, we were looking at this stock yesterday. We're a $9.8 million call buyer, came in at the 50 strikes for June 18th of 2026. Not only do I really like the price action and momentum here, but we're quite literally following in the footsteps of someone who dropped $10 million into this trade yesterday and is up over $4 million today on it. So I think that says a lot about the quality of the setup. While the immediate price action is really great, that doesn't mean Enphase has to rise tomorrow. This trade is more so being looked at in a broader sense. Of course, the trader here has all the way out until June of next year, but like in the short term, there is some like really good price movement happening, and I wouldn't be surprised to see a multi-day to week continuation as we have seen with this stock many times in the past, like in the recent past especially. So it's definitely on my radar for that. And again, there was a recent big money trade with it as well. On top of that, when we look at the Bookmap, there are very thin sell walls overhead. Like the largest sell wall that that exists on this stock is at $50, and the stock is currently at 43 right now. So not only is it very far away, but also too, there's only 4,500 shares stacked up. So basically, there's no one really looking to sell this stock, and I'm not all that surprised by that, considering the stock fell from $340 a share all the way down to $32 per share over the past few years. So anyone who would have sold like certainly has sold already. And then like in a shorter term sense, anyone who was considering selling, definitely would have gotten stopped out from last week's gap down. So basically, I think there's like a large like buying imbalance here, and the way in which it's moving only brings in more buyers. So it's definitely on my radar, and I'm very excited to see how this stock continues to do, not only in the short term, but especially with this big money trade. So that's very nice to see. But another stock that is definitely close on watch is OKLO, and it is to the downside. This one was mentioned yesterday, but we didn't see like a true break just yet. Basically, yesterday they were running up really well in pre-market as they had news where they're having strategic collaborations to boost their critical fuel that's needed for their advanced nuclear reactors. Investors loved it in pre-market and then sold the hell out of the stock once the market opened. And that's never a good thing to see. Basically, it just shows that the investor sentiment flipped in a very intense way very quickly. And especially when we see a stock like Oklo reverse and actually close down in the day by 8.5%, it definitely stops a fair amount of people out as well. Basically, I look at this stock in the sense where it is relatively weak. The stock has been crushing it for the past few years. Rejected hard off that all-time high right around like $73.50 per share. It's been selling off hard over the past few weeks, and we're starting to see like investors just unload this. And as we can see in the past, especially from the most recent like mega breakout from February, like when it sold off hard for multiple months at a time. And then also when we look at like the percentage it dropped by nearly 70%. So far, the current drawdown from the high is only around 24%. And basically this stock is on the radar for a potential like continuation lower. And I think that the risk reward is actually even better today than it was yesterday. With this setup, we need to see a break of $55 in like that 30-cent area. If you want to give it more wiggle room, like there's nothing wrong with that, like to the downside. So like if you want to give it to like, you could take 55, like the $55 support, or even lower than that. Again, there's nothing wrong with that. But we do need to see this area of short-term support break. We can see that the stock touched this level multiple times today, but buyers have been holding strong. We need to see that break, and if it does break, I can certainly see this as a very nice trade if like a stop loss was set at that $56.70 area. In that case, it would be risking like $1.40 per share. And then in the event we do see a breakdown, I can definitely see this stock getting to like 48 or lower over like the next trading week or so. In that case, that's like $7 in potential reward. So to risk $1.40 to make potentially $7 or more, that's definitely enticing, especially on a stock that is a strong moving stock that rejected hard off news and has been one of the most in-play stocks over the past few years. So either way, it's definitely on my radar, and I think it should be interesting. But again, don't get too much FOMO. Wait for that break, and it should be exciting. But besides that, let's jump right into today's momentum plays. And with the first one, we are looking at ticker symbol SMCI. This was a nice one from yesterday. Basically, for today, we are looking for a potential continuation past $49.55. If you want to be a little bit safer, there's nothing wrong with waiting until 50 to get past that resistance level. But the next one is with RUM, R-U-M. This is Rumble. For this one, we are looking for a potential break past $9.35. And then with the last one, we are looking at Apple. This one's to the downside, just in case we see the inflation data come in bad and we do see a pullback with the market. Apple has also been one of the relatively weaker big tech stocks. As we can see, not only has the stock been struggling quite a bit over the past few months, but even if we look at the heat map today, Apple was down when 75% of the market actually closed up in the green. So I do see some weakness here. In the event we do see a break below that $199.50 area, there can be some bearish opportunities. But either way, these three stocks are definitely on watch for potential continuations tomorrow. if and only if they break through the levels listed. But as always, make sure to protect yourself by having stop losses and sizing reasonably. And then besides that, let's jump right into today's $1 million big money trade. And we are looking at ticker symbol ENTG. So basically this stock has been selling off quite a bit over the past year or so, and a trader came in today and bought around $1 million of the 90 strike call options that expire on October 17th of 2025. These options are a little bit far out of the money, which definitely makes this more of a higher risk, higher potential reward setup. The options do have a lot of time, though, which definitely helps. And then looking at the setup overall, this company delivers materials and you could just say general solutions for the semiconductor industry, which has been, I would say, almost single-handedly carrying the market lately, especially considering NVIDIA is ripping like it is, let alone AMD, AVGO, MU, and a bunch of other stocks, SMCI. So basically, this looks like a kind of like a second-order effect style play. Should be interesting. I definitely, I think it's definitely a stock worth keeping on the radar, especially considering the way in which we are seeing semiconductor stocks moving. So either way, keep it close on watch. And if you are new to the channel, definitely make sure to subscribe because every single day we cover multi-million-dollar big money trades just like this one. And yesterday's was Enphase, which was a $10 million trade. And today it popped up by just under 13% today. In addition to daily multi-million-dollar big money trades, we also cover daily SPY levels and analysis, important events, information, charts, data, and basically everything you need to know about the stock market in around 20 to 25 minutes or less. And if you subscribe, you'll get our videos recommended to you more often. So definitely consider joining the StockedUp crew by subscribing. But we also want to give a giant shout out to today's member of the day, Craig, in the StockedUp Discord. You have been crushing it lately, and when you made this post in the testimonials channel today, definitely put like a giant smile on my face. Huge shout out to you, Craig. Thank you so much for all the kind words, and keep on crushing it. It really means a lot. But yeah, seriously, great job, and keep up the great work going forward. It's truly awesome to see posts like this one. So that's awesome, and huge congratulations to you. But as we've said, we are set for a pretty exciting day in the market tomorrow. We are kissing that all-time high. We have some important inflation data set to release 1 hour before open, so it should be exciting. If you are into short-term trading, definitely check out that first link in the description and in the comments down below to get full access to the StockedUp trading floor. We cover basically everything you need to know about the stock market every single day, daily day trade alerts, big money trades. You can join our weekly live events and chat with Tom, myself, and the rest of our staff team all day long. Definitely check it out. You can save quite a bit with that first link in the description in the comments down below. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.